Hi, everyone, and welcome to Mish's Market Minute. My name is Michelle Schneider, known as Mish, and once again, I'd like to thank StockCharts for hosting me. I thought we would do something a little bit different today. What I'm going to do is what I call a deep review with a few new picks. Last week, on October the 2nd, I actually gave 13 what I called lucky picks. So what I'd like to do is go through all of those picks, see where we actually had recommended them, or at least the action plan, where they are now, whether they're still set up, whether they have more, whether you should be taking profits, etc. I also want to start, though, with two of the major themes that I've covered over the last several weeks, which has been transportation and biotechnology. And then I'm going to end with three new picks. So let's get going. First, I'd like to give you the list of the picks so you can see what to expect. Corn, wheat, cane, Vietnam, CHWY, Ballard, IBB, Uber, Scorpio, Harley Davidson, FSLY, COHU, FVAC, and then the three new ones will be General Electric, Mylan Labs, and USO Oil. So now I'm going to switch screens here, so give me a second. So now let's start right away with IBB. And when I had talked to you at IBB, if we just look at it from a week ago, we had mentioned that it was clearing back over this 50-day moving average right here, and that the real motion at the time was just starting to hit against the 50-day moving average. And so what I recommended was buying it at around 136, risking to under 134. And look, as of the close on Thursday, it closed at 141.43. So far you'd be in the money, over $5, almost $6 on this trade. And depending on where your risk, we're looking at a target somewhere around 145, 146. So cha-ching, that's a good trade. Let's move on. I also had talked to you a couple of weeks ago about IYT. This is the index for the transportation sector. At that point, I called it the leading sector of the market. And actually, this is going very, very close to new all-time highs. New all-time highs were made in 2018, very close, about $1 from here. So at the time, I said that you should probably buy it on a pullback to 190 or over 202. So if you waited to over 202, you might have gotten in and had a little bit of risk here, but I mentioned that you should risk against the 50-day moving average. Now past 202, we're at 208, $6 in the trade. This probably at this point now, when we go into uncharted territory, it would be very difficult to understand exactly what the profit target would be. So I would just simply say whatever you used as a risk, at the very least, you should be going to a no loss stop. And then try to use about a 2-to-1, so whatever you risk, double that to take your first profit target. If we were in the trade at 202 and we risked, let's say, to under 200 at that point, we didn't get in right before the swoon because I was waiting for this dip, but did get in at 202. We have a risk under 200, so for us, we've already moved to a no-loss stop, and we're already starting to take some profit here along the way, looking for a second profit target, probably somewhere around 212. All right, so those are the two ETFs from recent weeks. And of course, yes, thank you. The fact that the market is doing well has helped a lot. But what I'd like to do now is go to the individual picks. So let's look at corn. That was the first one that I covered last week. And I had mentioned that corn was clearing over the 200-week moving average. Excuse me, the 200-day moving average. And we looked at real motion and we said the momentum was starting to do well. What's interesting is even now with this, corn is not on our triple play indicator outperforming yet the SPY, and it had a little bit of a sell-off today. But nonetheless, the move really to buy was pretty much over 13, and now it got up to a high of around 1340 on Thursday, and now has sold off a little bit. Again, with all these trades, I still think from a longer term, corn looks much, much stronger and will continue to go up. But trade management is always essential. So if you're in from around 13, then what you want to do is you want to actually put a no loss stop. If you're in from a little higher, because this is Thursday, Wednesday, Tuesday, Monday, Friday, Thursday. When I talked to you, it was here, I mentioned to get through in at 3:30. Let's say you got in at 3:30 instead, especially if you were watching this on last Friday, and your risk was under 1290. Well, you haven't really done anything yet, so I would just keep the risk under 1290. Now, we also talked about wheat at the time. Whoops, this is not going to let me do wheat. Let's try it this way. I'm sure it will do it this way. There we go. And also the momentum was going up here on real motion. This was outperforming SPY. And if we look at the day that I talked to you once again, just counting back Thursday, Wednesday, Tuesday, Monday, Friday, Thursday, it was this day. I mentioned that once it got through 575, it looked like a good buy. We were actually buying over 570 and it got up to 6 with a little bit of a correction today. So again, at this point, you really want to do trade management. So I would probably use the 10-day moving average now with a move under 568. You can see the magenta line here. This is the 10. As my stop, we don't want to lose money in any of these trades at this point. And I would hold on to this because you can see the all-time, well, not the all-time high, but the most recent high was right in the beginning of 2020. And we want to see that taken out a little bit over 610 and for it to continue from there. We also covered Kane. And Kane, I had mentioned to buy over the 200-day moving average, which it cleared at 615, traded up to a high of around 635. And right now on Thursday here had an inside day. You can see the momentum starting to increase. This too is just now starting to move. Once again, if you really want to do these as more active trades, you could use a stop under 614, or if you wanted to give it a little room, this is where we have our stop now, although we're long from lower levels. Our stop would be under 6. So that gives it a little bit of wiggle room. We also talked about Vietnam. And I remember very specifically saying that if it cleared 15, you might want to look at it as a buy with a risk to underneath the 50-day moving average. Well, it's now trading at 1508. It does have to get through 1550. What you can't see here is the weekly chart moving average is up there at 1550, the 200 week. But nonetheless, I would continue to play this just the way you might have already gotten into it. Over 15 was your entry, and looking for maybe give it a little room, have a stop, let's say under 1460, 40 cents or so, just to see if this thing can get going. I also gave you CHWY, and at the time CHWY was sitting on the 50-day moving average, and we mentioned that the momentum here was still not really doing great, and that still has happened. So even though it's been dancing along the 50-day moving average, the point is that this thing either will die on the vine because the momentum is a lead indicator potentially showing us that this can't get going, or we'll start to see the momentum catch up, and if it can clear over this 50-day moving average, that would be great. That would mean probably we'll start to see this move up. But nonetheless, the recommendation was to wait for 2 closes over the 50, which it did. So you might be long around 57. It closed on Thursday at 58.67. And we're looking for a move up to around 64.65. I would probably keep my stop now, not at 57, that's a little tight, maybe under 56 if you are just getting into it, or at least somewhere between 55 and 56. Then I gave you Ballard, which is a lithium battery, power battery. And with this one, I also mentioned at the time that we wanted to get in here over that 50-day moving average. And if we look at that 50-day moving average right here, your day of entry would have been somewhere around 1630. And so again, you would risk about $1 to about 15.30. And this thing has gotten up to, from 16.30, Ballard made a high of, actually on Thursday, made a high of 19.18. So if you risked $1, you actually already had a 2-to-1, and you actually should have been taking a profit at around 18.30 today. because it got up higher than that at 19.18. So you should already have half your money out of this with a profitable trade. And at that point, when you get to a target, you want to go to a no loss stop. So far, I'm batting 1,000 here, which is great. Okay, now one of the other trade I gave you was Uber, and I was very specific in my instructions. So this is one that has not set up yet. We talked about the fact that Uber had to clear on a closing basis 38, and that has not happened yet. Got close on Thursday when it made a high just about, let me just take a look at this here on a different chart where I can get my highs and lows. The high was 37.83. So you can see it's flirting with it. And since last Thursday when I did the last one, it hasn't cleared that 38. So one thing you know for sure, there will be buying over 38 if it can get there, and I would take advantage of that, and I would look at Uber over 38 with a stop at around 36.40. So you're really looking at about $1.60. So you want to see this get to maybe around 41.42, which is really where it was here in February before the big giant swoon. So I'm still very, very friendly to this company. Then we talked about an interesting stock. I had covered this during my transportation week, and this is Scorpio Tankers, which is a stock that deals with marine transportation. And if I recall, I told you that there wasn't really much in the way of American stock market stocks for marine. There's dry ships, but I don't really love that. Otherwise, most of the marine transportation is actually either Chinese or European. And so I mentioned to you last week that this was having a divergence because it was over the 50-day moving average on the real motion, but not over the 50-day moving average on the actual 50-day moving average here on the daily chart. So what does that mean to me? Well, one of the things that we talk about when we talk about real motion, and this is the exciting indicator that y'all going to have access to buy once it gets its official release, is that it often, well, first of all, momentum is hard to see. You can see price, you can see moving averages, you can see Fibonacci's, etc., but you cannot see momentum. The best way to measure momentum that I know is just really basically looking at slopes on moving averages. But in this case, even the slope is telling you that it's down, that it hasn't gotten going, why the momentum invisibly, but yet we can see through our indicator here, is showing you that momentum is actually increasing. So the most conservative way to look at this particular stock is probably, like I usually tell you in the past, is wait for an official phase change, which would be 2 closes over the 50-day moving average or 2 closes over 12.12. And then you can decide on your risk at the point. You probably would want to risk maybe to around 11 or slightly under 11 because now 11 has been holding. We also looked at HOG. So you can see so far a couple of things. Number one is either you're already making money in the ones that I've talked about in the beginning, or you're waiting for the ones that haven't set up to set up. Or a couple of them you are making money, but you still haven't made enough to actually warrant moving up your stop to a no loss or taking a profit target yet. Or in this case, we talked about with HOG that this was having a positive divergence, that it was clearing not only the 200 that it was holding on, but it was clearing the 50 last week. And I mentioned that this was probably a good buy if you just wanted to wait as it cleared the 2 moving averages. So if we look at HOG, your entry points in HOG would probably have been somewhere around 26 and change, 26.15. And we can see right now that your high as of Thursday was 29.41. So you already had about $1.30 into this trade. But again, we have to look at what the risk was. So what you would have done on this day is you would have risked to under the low of that day. So you would have gotten in at, you would have paid a little bit higher than that. You would have gotten it around 26.90, risk to 26.19. So that would be really been like a 90-cent risk. And from 27, let's just call it that, with a 90-cent risk, you would have been looking at a move to 28.80. So guess what? You had your 2-to-1 on Thursday if you followed that rule. And now, of course, a no loss stop. And now you want to look for 4-to-1. Which means what you really want to see at this point for this stock to continue, and look at this momentum here, how nice it is, and it's outperforming the SPY, is to get this move over 30, because that would take out the price action since February, and I think that could be a very good place. Now, would I first be a buyer there at that point? Well, your risk would be a little bit far. To me, that would mean also the stock is a little frothy. So I would certainly be looking to take a profit target above 30. And if I did want to buy over 30, I would probably think of it more as an active day trade. But even all of this I've shown you is small change. What I also gave you was FSLY. That was no small change. And what I mentioned to you about FSLY was that we were already long at 83.50 and we'd already taken a profit target, but if it cleared 100, this is where I recommended it. And I mentioned that if you bought it over a 100, you could pick your risk, but probably the best thing would be to use the 10-day moving average. So let's say you risked it around $97.03. Well, what happened to this stock on Wednesday was that it totally exploded. So you went from 100 up to a high of 121.35, with on Thursday making a high of 122.24, which means you had $22 move from over 100 with a $3 risk. You probably would have taken 2 profit targets in one day, made a tremendous amount of money. The move was spectacular. Absolutely, to get a 21% move in the course of a day is just incredible from your entry point. And so now I would say you would use a trailing stop, or if you really wanted to stick with this trade, you can risk right to where you got in at 100. I probably would want to keep my risk now on a trailing stop, let's say under 104, about 103. All right, the next one was COHU. And this is a technology stock. It actually services technology, if you recall me talking about it with you. And again, I said this had an interesting divergence in that it was clearing the 50 and it cleared the 200 just at the same time, but they cleared the 50 was the divergence because it hadn't quite cleared the 50 yet. And that once you got a confirmed phase change over these moving averages, then it was probably an interesting place to be looking at this stock for a buy. So that means that you would have gotten in, let's even be conservative and say you got in at 18.50. So far on Thursday, the move of this recent rally is at 19.13. So you don't really have any kind of great profit, especially if you wanted a risk to under 17.69, which is where the 50-day moving average is. So right now you have basically an 80-cent risk. So from 18.50, if we use the same kind of math, really you want to see this to get some kind of follow through. So you want to see a move, let's say at around $1.40 from there. So 18.50, 19.50. So you want to see this get to about 19.90 to 20, and that would give it right here at this high, and that would be a nice place to take a first profit and then go to a no loss stop and see if this stock has any other legs. And then the last one I gave you was FVAC of the old picks. And with FVAC, because we don't have enough information, this is a new issue, rare earth. I remember I mentioned to you that this was a blank check company doing rare earth minerals, that I wanted to see a move over 14.50. So this is another one that hasn't set up yet. In fact, you can see that Thursday was an inside day, meaning it traded inside the range of Wednesday. It's holding above its 50-day moving average. It's underneath its 10-day moving average. I told my clients to wait for a move over 14.50 if they wanted to add. By the way, we're long from down here, but if we wanted to add, and now that I'm looking at this with fresh eyes, even though this is well underperforming. I'm now thinking that if we got a weekly close, that would be a Friday close, let's say over 1405, really using the open from this candle day and then the close from this candle day, that would make it at around 1405. Then you can actually use the 50-day moving average as a risk, or under 1324. I like that. That's a really tight risk for a new position and a good place for an adding position. Okay, so that's everything. Not too bad, considering this was all before the Trump swoon last Friday, even though the Modern Family that I've talked to you about over and over and over again actually was firm, proving what I said to you for the last couple of weeks, which was IYT was the new leader, the transportation, the Russell small caps have done great, and XRT actually today went on to make new all-time highs, which is extraordinary. When the economic Modern Family, and let me just show you that so you can see, when the economic Modern Family does well, it's very hard to get bearish the market. A tech-led market is fun and exciting, but it's big corporation market. It's not necessarily anything to do with showing any signs that reflect the US economy. But when transportation, small caps, which are 2,000 stocks all within the United States, and retail, even though a lot of it is e-commerce retail, start to outperform the SPY and the Qs, what does that tell you? It tells you, obviously, that the market is optimistic, not only that it's going to get some kind of a stimulus, fiscal package stimulus, but that it's also very optimistic. And for whatever reasons, we can think about them, we can speculate it. Nonetheless, it's optimistic at this point that we're going to have a better economy as we go into the end of 2020 and into the beginning of 2021. Okay, I'd like to end with 3 new stocks to show you. First one is GE. So what I liked about GE is this hadn't cleared the 50 until Thursday, really. I mean, it had one pop here, while the real motion down here that I'm looking at actually was sitting on the 50. So we saw that positive divergence. Remember, I was telling you that if we see the momentum invisible except through the eyes of real motion, showing a positive divergence in momentum, that often precedes the price going up. And clearly right now what we can see is this price has cleared on Thursday and it closed at 665. So what I would like to see on Friday would be, first of all, this to hold 665 or close above 665. And then what I would do, and by the way, what you can't see is an exponential weekly moving average that comes in right at 665. So if it closed or at least got above 665 and held, you can have a really tight risk on this one, probably to under 6. So now let's do the math. Let's assume you get in at 670, you're going to risk to under 6, that's 70 cents. So basically, once again, you'd be looking for $1.40, so you'd be looking for a move really close to the 200-day moving average. I'd say anywhere between 794 and 804 would probably be a good profit target. So that's number 1. Number 2, Mylan Labs. And I think I may have showed you this when I did my biotech week. But what's interesting now is that this had the positive divergence right here as of the last couple of days, clearing the 50 and now touching the 200. Here it is right at the 50-day moving average. It had an explosive move on Thursday. So now what you want to do as it touched it is, if you get a follow through over 1572, I'd probably put my risk a little bit wider, maybe risks under 1450, 1440, and see if this thing can't follow through. And let's say, just rounding it off, we pay 16 and we're risking $1.50 on that to see if you can get to $3. That would mean that this would eventually have to break out over the 200 and get closer to around 1920. Why am I optimistic this could happen? Huge short float, been basing for a long time, and now by any signs of today's volume, it looked really good. I probably have mentioned this to you before. It's a total counter trend trade, but USO has had a positive divergence on momentum even when this thing was tanking and looked like you know what. Especially look at this low you had a week ago, and then yet the momentum didn't really go anywhere, and now I had talked to you about this because I remember saying to you that now you want to look for a phase change. So it looked like it just touched at the 50-day moving average. Then there's hurricane news. Any kind of news could come out about this. So I always believe the technicals precede the fundamentals anyway. I really like when I have a fundamental reason and a technical reason. But when I have this type of compelling picture, you get two closes over, let's say 29.15. You can probably have a pretty, well, you can have any kind of risk you want. You can risk to under the low here, which I can tell you right now is at 2609. So let's say you're risking $3. That's a lot. I'd probably be looking for a risk more like underneath the low and when it gapped the next day. So let's say under 2740. And now if you're getting in, you're looking at about $1.50 type of risk, in which case you'd be looking for a $3 move. And that's not crazy. I mean, that could easily go up into the $32, $33 range, and then I'd be starting to take my profit. So those are my three new picks, along with everything else that I showed you. Made some really good money all around. Nothing lost money, even more important. And a couple of things haven't even set up yet. So keep your eye on Uber and keep your eye on FVAC. And then also keep your eye still on CHWY if you haven't already gotten in. Vietnam, you're still really within the space. And GE, Mylan, and USO. Okay, that's it for now. Again, you can see the power of the real motion indicator and how when it lines up with moving averages and no messy charts, it's that simple to make money. Of course, respecting the overall macro, which right now is very strong. Thank you so much for watching, and I'll see you all again next week. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.